Did you know that a staggering $13 trillion was printed between 2020 and 2021? You may have wondered how Warren Buffett, the world's most successful investor, navigates the turbulent waters of the economy. As we approach a new economic era marked by high inflation, rising interest rates, and a slowing economy, it is critical to comprehend the Oracle of Omaha strategies. Today, we'll unravel Buffett's three-step plan for the new economy and why you need to prepare now.
I'd like to talk to you about your financial future, and I hope those figures become applicable to all of you as we go along.
Step 1. Recognize the inflation tsunami. In the vast ocean of the global economy, there are many currents, waves, and tides that investors must navigate. One of the most powerful and potentially devastating of these is inflation. Much like a tsunami, inflation can start as a small ripple in the distance, but quickly grow into a massive wave that engulfs everything in its path. To truly grasp the magnitude of the inflation tsunami, one must first understand its origins. As I mentioned at the start of this video, between 2020 and 2021, a staggering $13 trillion was printed globally. To put that into perspective, that's more than the entire GDP of China, the world's second largest economy. This massive influx of money into the global economy is similar to a sudden surge of water in the ocean, creating the potential for massive waves.
We've sort of attacked what you do yourself, and you develop skills that people are willing to pay for in the future, regardless of what the unit of exchange is. But in terms of inflation in our own businesses, it's extraordinary how much we've seen. I think you interviewed Herb Lumpkin at the Furniture Mart, and for 2 years, the prices have just kept coming in higher for these things, and we sell them for higher prices, and people have more money than they've had before.
Initially, this influx of money led to what seemed like an economic boom. Businesses expanded, jobs were created, and consumers spent with abandon. It's reminiscent of the sea receding before a tsunami, a deceptive calm before the storm. Everything seems normal, even prosperous, but the underlying forces are building. Warren Buffett, with his keen insight, once remarked, "Inflation is as violent as a mugger, as frightening as an armed robber, and as deadly as a hitman." While the initial effects of this money printing might have seemed beneficial, the long-term consequences are far more sinister. As more money flooded the market, the value of each dollar began to decrease. This is the very essence of inflation. Too much money chasing too few goods. Imagine if suddenly, in a town, everyone was given $1 million. Initially, there would be jubilation. But soon, the local bakery that used to sell bread for $2 might start charging $20 or even $200. Why? Because with everyone having more money, the perceived value of each dollar diminishes. This is precisely what's happening on a global scale. Warren Buffett, the beacon of wisdom in the financial world, has always emphasized the importance of understanding the nuances of the market. He once said, "What we learn from history is that people don't learn from history." And history has shown us that an unchecked money supply leads to inflation. As the newly printed money coursed through the economy, it began to erode the value of each dollar. Imagine having a pizza sliced into 8 pieces. If you suddenly slice it into 16, without increasing the size of the pizza, each slice becomes smaller. Similarly, as more money chased the same number of goods, each dollar's purchasing power diminished. This devaluation has real-world implications. That dream home that seemed within reach a year ago now has a much heftier price tag. The weekly grocery bill inches up month after month. That loaf of bread, the monthly rent, the cost of education, and even that cup of coffee are all getting more expensive. The average consumer might be earning more dollars, but each of those dollars is buying them less and less. It's a silent thief, robbing people of their purchasing power. Recognizing the potential dangers of unchecked inflation, central banks, like the Federal Reserve, they step in to try and control the tide by adjusting interest rates. In 2022, as the inflation waves became more apparent, the Federal Reserve began raising interest rates. While this move is designed to cool down an overheated economy, it's not without its repercussions. Higher interest rates means higher borrowing costs. For the average person, this could mean more expensive mortgages, car loans, and credit card interest rates. In conclusion, the inflation tsunami is a complex interplay of economic forces, decisions, and consequences. By recognizing the early signs and understanding its origins and impacts, investors can better position themselves to ride the wave rather than be overwhelmed by it. Step number 2. Value and long-term vision in an oversaturated market. In the world of investing, it's easy to get caught up in the promise of quick profits and short-term gains. The market, with its ever-fluctuating prices and trends, can sometimes resemble a bustling bazaar, with traders shouting from every corner, each promising the deal of a lifetime. But in this cacophony, the voice of wisdom often speaks in a calm, steady tone, urging patience and foresight. This is the voice of Warren Buffett, and his message is clear. Focus on value and maintain a long-term vision.
Investing is really not complicated. I mean, the basic framework for it is simple. Now then you have to work at it some to find the best pockets of undervaluation maybe or something.
The concept of value is foundational in Buffett's investment philosophy. But what does it truly mean to invest in value, especially in an oversaturated market? Imagine walking into an art gallery filled with thousands of paintings. Some are vibrant and immediately catch the eye, while others are more subdued. The vibrant paintings, they might be the talk of the town today, but will they stand the test of time? Will they be as cherished a decade from now as they are today? On the other hand, the subdued paintings, created by artists who've honed their craft over years, might not make headlines today, but could become priceless masterpieces in the future. The recent economic landscape, especially after the influx of $13 trillion, presents a similar scenario. There's an abundance of opportunities, but not all are created equal. Some stocks and assets might seem attractive due to the current hype or trend, but they lack the intrinsic value that stands the test of time. Others, though not in the limelight, have strong fundamentals and promise steady growth over the years. Buffett's approach to such a market is remarkably similar to that of a seasoned art collector who can discern timeless masterpieces from fleeting sensations. He delves deep into a company's fundamentals, understanding its business model, competitive advantage, and growth potential. And it's not just about the price of the stock today. It's about the value it promises tomorrow, a decade from now, and even further into the future. But how does one decide what's valuable in today's market, especially when there's an oversupply, much like the skyscrapers of New York's Billionaires Row? The key lies in research and patience. In the age of information, data is abundant, but wisdom is rare. Analyzing a company's financial statements, understanding its market position, and evaluating its deeper prospects are essential steps in the value discovery process. It's about digging deeper, looking beyond the surface, and finding those hidden gems that promise long-term returns. Moreover, in an oversaturated market, the principles of supply and demand become even more pronounced. When there's an abundance of any asset, its price tends to decrease. This presents a golden opportunity for the wise investor. By identifying undervalued assets with strong fundamentals, one can invest at a lower price and enjoy higher returns as the market eventually recognizes the asset's true value. In essence, the oversaturated market, while challenging, it's not a maze without an exit. It's a puzzle, and the pieces, when put together with patience and insight, can reveal a picture of prosperity. As Buffett often says, time is the friend of the wonderful company and the enemy of the mediocre. In the long run, value always shines through, and those who recognize it early stand to reap the rewards. Step number 3. Financial education in a changing landscape.
But I'd like you to think about this for just a second. If, as we walked out of here today, I said I would like to buy 10% of your financial future, I was going to write you a check today, And from this day forth, you were going to give me 10% of everything you earned. How much would you want to charge me for that? I'm going to buy 1/10 of you. And I may take the low bid, incidentally, so be careful what you write down. Well, I think if you thought about that a little while, you can contemplate that for a few minutes. You know, you're going to get a check from me today, and you can do anything you want with the money, but from this day forth, you have to give me 10% of what you earn. I think it would be very foolish of you, any of you, if you asked for less than, say, $50,000. Now, it's going to be a few years before you're out earning money, and so I've got a few years of dead money there. But then I would start getting this royalty on you as you went along. So I really think that if you thought about it, most of you would want a fair amount more than that, and I think you'd be right. Fortunately, I didn't make this deal with anybody when I started out, so nobody's got a 10% royalty on me. But I think that 50,000 would sort of be the absolute minimum. And if you think about that, that means that right today, you are worth 500,000.
You know, there's an old saying that goes, "Give a man a fish and you feed him for a day. Teach a man to fish and you feed him for a lifetime." Now, let's tweak that a bit for our context. Give a person a stock tip and you might make them a quick buck. Teach them about financial education and you'll set them up for life. That's the essence of our third step. The power and importance of financial education in this ever-evolving economic landscape. Imagine you're at a magic show, and the magician pulls out a deck of cards. He shuffles them, makes a few flashy moves, and then asks you to pick a card, any card. Now, if you know a thing or two about hand or card tricks, you probably view the entire act differently, right? You'd be looking for those subtle cues, those little tells, trying to figure out the trick behind the magic. That's what financial education does in the world of investing. It demystifies the market, allowing you to see the mechanisms behind the movements. One of the core messages of this video is the cyclical nature of economies. Booms and busts aren't new. They've been around as long as markets have existed. But here's the kicker. While we can't prevent those cycles, with the right knowledge, we can navigate them more effectively. Warren Buffett, the Oracle of Omaha himself, is a lifelong learner. He's known to spend a significant portion of his day reading and staying updated. Why? Because he understands that, in the world of finance, knowledge truly is power. When the tides of the economy shift, as they inevitably do, being informed allows you to pivot, adapt, and make decisions not out of fear, but out of understanding. Let's circle back to the recent economic events. With the influx of $13 trillion and rising inflation, it's easy to get overwhelmed. But here's a thought. Instead of seeing these as impracticable challenges, what if we viewed them as lessons in a global classroom? Each event, each trend, and each shift offers insights and learning opportunities. And the more we learn, the better equipped we are to handle future uncertainties. So, how does one stay financially educated? Well, it's a mix of staying updated with current events, understanding historical trends, and constantly seeking knowledge. Books, seminars, courses, and even conversations can be sources of valuable insights. And in today's digital age, a wealth of information is just a click away. In wrapping up this step, let's lean on another Buffett gem. The most important investment you can make is in yourself. In the grand scheme of things, market trends will come and go, but the knowledge you acquire, the wisdom you cultivate, that will stay with you, guiding your financial journey every step of the way. So, are you ready to invest? I'm sure you are. All right, guys, we've been on quite the roller coaster today, haven't we? From tidal waves of inflation to hunting for real value in a market that's bursting at the seams, and then wrapping our heads around the game changer that is financial education. I know it's a lot to take in, but hey, that's the beauty of this financial world we're all navigating. And with a bit of Warren Buffett's wisdom in our back pocket, it does feel a tad easier, doesn't it? You know, at the end of the day, it's not just about dollars and cents. It's about the choices we make, the dreams we chase, and the future we're building. So, as we wrap up, let's make a little pact. Let's promise to keep on learning, to stay curious, and to always have each other's backs on this wild financial journey. Because in the wise words of Buffett, It's all about planting those trees today so we can enjoy the shade tomorrow. Well, cheers to that. Catch you all next time, and remember, stay savvy, stay smart, and always invest with your heart and head in sync.